Welcome back to the channel. Right now, the crypto market is in one of the most mentally exhausting phases of the entire cycle, the range-bound compression phase. This is the phase that breaks people, not the crash, not the blow-off top, but the endless chop where nothing seems to happen and everyone slowly loses conviction. Bitcoin hovering around the high $80,000 and Ethereum sitting near $2,900 feels deceptive. On the surface, these are strong prices. If you told someone 2 years ago that Bitcoin would be holding near $90 while Ethereum consolidates under $3K, they would assume euphoria. But that's not what this phase is. This phase is silent distribution of weak hands and silent accumulation by strong hands. Institutions, long-term holders, funds, and high-net-worth players thrive in these moments because retail attention is gone, engagement is down, sentiment is confused. People are bored, frustrated, and impatient. And impatience is the tax the market charges to those who don't understand cycles. Why Bitcoin and Ethereum still control everything. This is something that needs to be drilled into people repeatedly because it never changes. You can have the best meme coin. You can have the strongest narrative. You can have the most active community. None of it matters if Bitcoin and Ethereum are not trending. Bitcoin is liquidity. Ethereum is infrastructure. Everything else is a derivative of those two. When Bitcoin is stuck in a range, liquidity is cautious, capital is selective, risk appetite is low. That means meme coins don't trend, they spike briefly then fade. When Ethereum isn't trending, DeFi activity slows, NFT activity slows, on-chain volume cools, and Base, Solana, and Layer 2 ecosystems struggle to sustain momentum. This is why people feel like they're doing everything right and still losing money. They're trading against the macro environment, the two choices investors have right now. At moments like this, the market offers only two intelligent paths. Option 1, sit tight and preserve capital. There is absolutely nothing wrong with sitting on the sidelines. Cash is a position. Stablecoins are a position. Patience is a position. If you don't see clear setups, if you're emotionally tired, if you're forcing trades just to feel productive, you're doing it wrong. The market will always give you another opportunity, but it will not refund emotional capital. Option 2, aggressive accumulation, but only the right assets. If you are accumulating in this environment, Bitcoin and Ethereum are the only two assets that make sense. Not because they're sexy, not because they're going to 10x tomorrow, but because they are inevitable. Every cycle, Bitcoin and Ethereum lead. Every cycle, they break all-time highs first. Every cycle, they unlock liquidity for the rest of the market. Accumulating anything else aggressively right now is not investing, it's gambling. Portfolio construction. Why 60 to 70% BTC and ETH is non-negotiable. This is where most retail investors fail. They over-allocate to high-risk assets because they want life-changing gains quickly. But they don't realize that the foundation of exponential returns is survival. A portfolio with 60 to 70% in Bitcoin and Ethereum does three things: reduces volatility, protects capital during drawdowns, positions you to deploy into memes when momentum returns. The remaining 30 to 40% is where you express creativity, conviction, and asymmetric risk, but that portion must be managed actively. Meme coins, opportunity still exists, but strategy matters. Despite the chop, meme coins are still launching daily that run to $1 million market cap, $3, $4, and sometimes far beyond that. But these moves are short-lived, hyper-speculative, and momentum-based. The biggest mistake people make is thinking they've found the next long-term hold, when in reality, they're early to a short-term narrative. The strategy here is simple, but emotionally difficult. Enter early. Ride the momentum. Take profits aggressively. Rotate gains back into ETH, BTC, or stables. Not doing this is how people turn winning trades into long-term bags. Why the long-term thesis still holds. Now let's talk about Toshi, and let's do it honestly, without bias, without hopium, and without denial. The bull run for Toshi is not over, but it also isn't guaranteed. The reason I remain bullish long-term comes down to structure, not price. Branding and identity. Toshi has one of the strongest brand identities in the Base ecosystem. Clean visuals, recognizable mascot, consistent messaging. In meme coins, branding is not optional. It's the product. Team and leadership. The team behind Toshi has demonstrated long-term commitment, Coco Slayer relocating across the world for the project is not something you see in cash grab meme coins. That level of sacrifice signals alignment, not extraction. Community strength. A meme coin lives and dies by its community. Toshi's community continues to show up during downtrends, and that matters more than hype during pumps. Communities built in pain outperform communities built in euphoria. The Binance factor and exchange expansion. One of the most overlooked catalysts is what hasn't happened yet. Toshi does not have a full Binance listing. Robinhood exposure is still pending. Global retail accessibility is still expanding. Every major listing historically acts as a liquidity unlock, not because of fundamentals, but because of accessibility. More buyers, more visibility, more legitimacy. These are structural tailwinds, not rumors. Bubble maps, insider supply and market fairness. Comparing Toshi and Brett reveals a key difference. Brett has a significantly higher concentration of insider supply. That doesn't make Brett bad, but it does introduce different risk dynamics. When insiders control a large portion of supply, price action becomes more fragile during volatility. Toshi's broader distribution creates more organic price discovery over time. Price action. Why patience is required right now. The recent rally to $131 million market cap was encouraging, but we are still below key support. This is where discipline matters. There are two valid entries: reclaim and hold the zone, break above 169 retest, then continuation. Anything in between is noise. Chasing inside no man's land is how people lose conviction. Everything is still tied to BTC and ETH. This cannot be emphasized enough. If Bitcoin chops, Toshi chops. If Ethereum stalls, Base stalls. The tide lifts all boats, but only when it actually comes in. Beyond crypto, why diversification matters more than ever. One of the biggest mistakes crypto-native investors make is thinking crypto is the only path to wealth. It isn't. True financial resilience comes from multi-asset exposure, stocks, real estate, collectibles like Pokemon, businesses' cash-flowing assets. Crypto is leverage, not a life plan. The gold versus crypto irony. Market psychology repeats itself endlessly. In 2024, when Bitcoin peaked, people mocked gold. That was the best time to rotate into gold. Now gold is ripping, crypto is quiet, and people are mocking crypto. This inversion is classic late-cycle behavior. The crowd is almost always wrong at extremes. Meme sector sentiment, quiet but dangerous. Right now, meme sentiment feels flat, bored, under-engaged. That's exactly when explosive moves happen. Markets don't explode when everyone is bullish. They explode when everyone has stopped paying attention. The anniversary of the 0.25 spike is symbolic, not predictive, but it reminds us how quickly sentiment can flip. Building beyond crypto, the 5G concept. The cellular/5G exploration might sound insane, but that's precisely why it matters. Projects that attempt to transcend crypto are the ones that survive multiple cycles. When a meme becomes a brand, and a brand becomes culture, it escapes the gravity of charts alone. That's not guaranteed, but it's rare, and rarity is where asymmetric upside lives. Final thoughts. This phase of the market is not about excitement, it's about positioning. Not everyone will make it to the next leg up, not because the opportunity isn't there, but because they quit early, overtraded, or lost faith. If you're still here, still learning, still paying attention, you're already ahead of most. I'll see you in the tealing. If you guys enjoyed this, make sure to like and subscribe, and I'll see you in the next one.